If you're like me, you just want this whole banking crisis to be over so that stocks can start going up again and you can start making money again. And while some analysts think the banking crisis is over, it might still be too soon to start investing in bank stocks, or stocks in general for that matter. As all eyes have been focused on the banking crisis, it's been easy to forget what's going on in the economy. Prices continue to rise, with McDonald's even raising the prices of their Big Macs. You may have heard the term disinflation. Well, don't forget that does not mean that inflation and prices are going down. It just means that inflation and prices are going up at a slower pace than they did in the past. And as the economy continues to slow down, companies continue to lay off workers, with Amazon now laying off another 9,000 more workers. Google, Meta, and Amazon together have now laid off more than 100,000 workers in the last 12 months. And while some people have pointed out that the large number of layoffs in the tech sector only make up a very small portion of the overall labor market, and they are correct, it's important to understand that the problems aren't just in the tech sector, that companies across the board continue to struggle. As we now got news today that Virgin Orbit is scrambling to avoid bankruptcy. And even though a lot of the banking fears are starting to settle down, and we did see quite a bit of bank stocks actually rally on Monday, there's still a lot of problems in the banking sector that need to get resolved. First Republic stock dropped over 40% on Monday, despite other regional banks rallying. Not only was First Republic hit by another credit downgrade by S&P, but now JP Morgan is advising First Republic on quote-unquote strategic alternatives to save the bank, including possibly a capital raise, which could dilute current shareholders and cause the stock price to fall even further. Another possibility is a sale of the bank. Both of those options are bad for shareholders, and that's why we saw the First Republic shares drop over 40% on Monday. And just because you thought the Credit Suisse saga was over and everything was fine and that's all taken care of, this continues to have major ramifications in the markets. As I explained in yesterday's video, $17 billion worth of Credit Suisse bonds were wiped out, and the holders of those AT1 bonds are not happy. And this has caused fears that AT1 bonds at other banks could be wiped out as well. If so, that would wipe $250 billion just gone overnight. AT1 bonds at European and Asian banks fell over 8% on Monday on fears that they would be written down. And while all of these problems are occurring in the banks and the economy, the Fed is really going to have a difficult choice to make on Wednesday when they decide how much to raise interest rates by, if they raise interest rates at all. On one hand, they have to continue to fight inflation, which continues to go up. On the other hand, they've got to bring financial stability back to the markets. At this point, CME futures are currently pricing in a 75% chance of a 25 basis point rate hike on Wednesday and a 25% chance of the Fed pausing. If the Fed goes through with their 25 basis point rate hike on Wednesday, we can expect the market to trade mostly flat, since that's pretty much priced in, and the market will really be moved based upon what the SEP and Jerome Powell's press conference has to say. However, if the Fed does pause, that would cause the market to absolutely rally. We'll find out on Wednesday at 2 p.m. Eastern Time, or about 2 hours before the market closes, what the Fed is going to do and what is in the actual summary of economic projections. Then 30 minutes later at 2:30 p.m. Eastern Time, Jerome Powell speaks, gives a press conference, and answers questions. This is by far the most uncertain Fed meeting we have had in months, and so all eyes are going to be on the Fed on Wednesday. If you want to know everything that you need to watch out for this week, make sure you sign up for my free newsletter that goes out every single Monday morning. It includes everything you need to know to get prepared for the week ahead. You can sign up for that free newsletter at stockcurry.vip/newsletter. That's stockcurry.vip/newsletter. If you got a lot out of this video, then be a good friend and share this video with your friends and family and on your social media pages so that they can know what's going on in the markets as well. And don't forget to hit the like button and subscribe. And if you missed yesterday's video where I went into a deep dive analysis of what this Credit Suisse bailout means for you, make sure you go watch the last video that I uploaded here.